Welcome to TradeTheNBI.com. This is John's report. It's for the 17th of August. And just so you know that even though I'm doing this report without a script, it's come to my attention that I would not be able to do this while walking. Who knew? Anyway, that being said, we can do a lot of things related to the market numbers without walking or basically prearranging anything. What we have here, though, is a very clear depiction of what the market is going to do. We've been in this constant uprise with our NBI readings, and the other day we began a little bit of softness here with the breakdown below, get this, the 40 level. So we're still a long way from breaking below that 33, which would be of any significant concern. And all we're doing is the same thing we have been doing, which is retesting ABM yellow numbers. But at the end of the day, still positive from that broader standpoint. And look at this continued drop of the NBI weight, 183. Even looking from a decline standpoint until you're well over that 7.5 range. So nothing dramatic at this particular stage. Though the range from yesterday was pretty reasonable. And from a NASDAQ standpoint, we went all the way to the ABM magenta there, and before it spiked back up. So volatility-wise, we're starting to get a little bit of a ramp up, and that's not unexpected going into the second half of the month. There's going to be rotation in that, particularly as some of the economic numbers come through. It's going to solidify a viewpoint on both inflation and whether or not there's stagnation. This whole idea of the Delta variant, and of course, troubling data out of China already, where some of the ports closing down again and things like that. So then potential for supply disruptions could be an unintended catalyst of inflation that's outside the realms of what the U.S. is doing as far as flooding labor and limiting certain economic activities. So that would be a big constraint on availability, and that will cause prices to skyrocket very quickly. Shortages always do that, and they don't even out. We saw that from the lumber situation when Canada was rebelling against the U.S. Very quickly sent inflationary pressures in a variety of different areas. And so that's something to look into the future too. We'll see how long or exacerbated the China situation, because that's at least a couple of weeks, but that would be the start of September before that impact would start to be known. But the market will react probably in another week or so if it feels that there's significance to it. From a euro standpoint, euro's not going anywhere. It's just the U.S. is going to continue to try and prop it, but really nothing sustainable from a euro standpoint. Bitcoin, from its standpoint, we had some positive extremes that needed to get filled back in, going all the way over to right about here. Just came slightly shy of it on the 45,000 range. The secondary level of the beginning was right up here at 45.8. Those all filled, and clearly with the well, it even started a little earlier where you had the breakdown below the 33, the white moving up, and it was just a slow move across until finally the white overtook completely, and that led to the most significant decline bars. Too dramatic. From a 5K standpoint, I just love the end of day setup as it took place, so I'll scroll back a little bit before the start of it, because we had just a back and forth going on, and it was a matter of filling back the previous positive extremes, the 44.46, 44.39. Did that all in due course, and every one of the little pops was reasonable. Presented up, but white taking over, led back to a move to the zero, and did that consistently. But by the time we ended up with a series of these P2s, we started to end up with a rising shakeout at that really of the extreme histogram a little high right there, just because I was wanting to point out the positive extreme that developed at the midpoint of the run. We ended up with one right about here early on, which is right in between the previous ones, not necessarily significant enough to mark. And then we had the other one, which was right at the 46.50 range again. And then the next range that became just a fraction higher at the 44.49.50. And sure enough, though, beautiful run. And then as soon as the white across above the 10 area there. Red dipped below and below the 33, in fact below the 25, which was even more significant and critical when you move below 19. And that was right there. You see the magenta at 20. So literally started the bar, and that was all the way from the open there at 71 and a quarter, with the expectation that moved down to the 449, and it even went further, filled all the way to the previous one at 44.46. So quite a significant move right at the end of the market, just clearing stops from everyone who thought they were jumping in the bandwagon for the nice long run. A little premature from that standpoint, but that's the whole point of it. Shake out the weak hands and rinse and repeat. And that's what the market loves to do. So we're just going to join in and go with the signals. As always, though, I will continue to update you on Skype chat, and anything relevant I will certainly put up. As always, trade well. Talk to you later.